Okay, today we see exercise number 7 from the MB Kadkol accountancy book, financial accounting book. To see the problem, Mr. Das keeps his books on single entry system. He gives the following information. First is statement of his as on 1/1/1980. Second is the summary of cash transactions. Summary of cash transactions. Then you have to check that summary of cash transaction, whether that is a statement only or it is a cash flow. Okay. In the debit side, there is a opening balance 1000. 1000 is the cash balance, and credit side there is a closing balance 2200. Started with opening balance and ended with closing balance. Therefore, it is cash book. Okay. This is cash book. There is no need of preparing the cash account. First, they are given the statement of his. Secondly, they are given the cash book. And thirdly, other information. This is the three set information given for you people for the conversion of single entry system to double entry system of bookkeeping. Okay. Now, regarding missing information, first statement of his is given. Second is cash book, that is also there. Then third requirement is debtors account, creditors account. Debtors account, creditors account. And regarding debtors and creditors, bills receivable and bills payable information is there in the problem. Therefore, you have to prepare the bills receivable and bills payable. So only two set of accounts you have to prepare. One is account related with debtors. Second is account related with creditor. This is the pre-requirement. Okay, first I'll tell you items coming in our solution. If you start with the statement of S, in the opening statement of S, creditors is there, it goes to opening balance. Opening balance. Then bills payable is there, this is opening bills payable. Capital is there, capital goes to balance sheet. Opening capital goes to balance sheet. Okay. And come to the asset side. Debtors, sundry debtors. This sundry debtors goes to opening statement, opening balance of debtors. Stock goes to trading account. Plant goes to balance sheet. Building goes to balance sheet. Cash goes to cash book. You see here, this 1000 opening statement of affairs cash is taken to the cash book, debit side, to balance brought down. You see this. Okay. So all the opening balances goes to their respective accounts. Okay. And bills receivable is there. Bills receivable goes to bills receivable opening balance. Furniture is there. Furniture goes to balance sheet. Okay. So from the opening statement of age, you have to take opening balances to the respective accounts if you open the account. Okay. Next, come to the cash book. In the cash book, two debtors is here, and you have to take this as a buy cash in the debtors account. This is buy cash in the debtors account. Next, cash sale goes to trading account. Cash sale goes to trading account, credit side. Bills receivable means cash received on bills receivable. Remember this. And this goes to bills receivable, credit side, buy cash. Okay. Debit side item completed. Next, come to credit side. Bills payable is here. Means cash paid against bills payable. This is nothing but payment made on bills payable. This goes to bills payable account debit side to cash. To cash. And buy creditor means cash paid to creditors. This goes to creditor account debit side to cash. Then cash purchase goes to trading account debit side. Cash purchase goes to trading account debit side. Office expense goes to P&L account debit side. Wages goes to trading account debit side. Carriage inward goes to trading account debit side. Duty and octroi goes to trading account debit side. Salary goes to P&L account debit side. Then printing goes to P&L account debit side. Drawing goes to balance sheet. You have to deduct in the capital. Okay. Closing balance goes to balance sheet asset side. This is the movement you have to make in the account. This is regarding statement of phase and cash flow. Now come to the other information. First one, credit sale. Credit sale goes to debtors account debit side. Debtors account debit side. Discount allowed reduces the debtors account credit side. Debtors account credit side. Credit purchase goes to creditor account. Creditor account credit side by credit purchase. Discount earned decreases the creditor goes to creditor account debit side. Return inward. Return inward means it is a sales return. It is a sales return. Return inward is a sales return. Inward means comes to your side. Comes your side. Comes your side means whenever you are already sold the goods, that comes back to your side. Therefore, it is inward. Return inward is a sales return. This comes to first debtors account credit side. Remember this. Debtors account credit side first by return. And then it is deducted in the trading account credit side in the sales. You have to deduct in the credit side trading account in the sales. Next is return outward. Return outward means goes out. Okay. Return outward means whatever you purchased, you return to the supplier. Means goes out. So it is related with purchase. Return outward means purchase, return. First you take in the creditor account. First you take in the creditor account debit side. Then you record in the trading account debit side, deduct in the purchase. Then bills receivable received. Bills receivable received means this is just like cash received from debtors. Bills received. Bill may be received from the debtor, cash may be received from the debtor, or check may be received from the debtor. Three items may be received from the debtors. Therefore, if cash is received in the debtors account by cash, check is received, debtors account by bank, bill is received, bill receivable is received, then it is by bills receivable. In the debtors account by bills receivable and bills receivable account to debtors account. It is to be entered in the debtors account and bills receivable account. 700 rupee. Okay. Next, bad debt. Bad debt decrease the debtors. Therefore, comes on the debtors account debit side. Sorry, credit side. Debtors account credit side. This is the debtors account credit side first, and then P&L account debit side as a expense. Bills payable accepted. Bills payable accepted means bills payable accepted by putting your sign and given to the supplier, creditor. Means instead of paying the cash, bill is given to the supplier. So it is bills payable accepted means nothing but just like check given to a supplier, creditor. So it comes on the creditor account debit side. Creditor account debit side first. Then bills payable account credit side. Credit side. Okay. Then closing stock. Closing stock comes in the trading account credit side and balance sheet asset side. Clear? Then provision on debtors for doubtful debt, RDD adjustment. RDD first comes in the P&L account. First comes in the P&L account. Then you have to take in the balance sheet, asset side, deduct in the debtors. Deduct in the debtors. Next is depreciation. Depreciate plant and machinery by 10%. Plant and machinery 10%. So first you take 10% on plant and 10% on furniture in the P&L account. Then deduct in the asset balance sheet. In the asset side balance sheet, you deduct in the respective asset. Then building depreciate 5%. So in the P&L account, you write the heading to depreciation. Under that, you write plant, furniture, building. Calculate the required percentage, and then the same amount is to be deducted in the respective asset in the balance sheet. This is the point you remember. Okay, these are the points you have to cover. Then prepare trading profit and loss account. This is the question. Okay, now I will prepare the trading profit and loss account. It is directly not possible. Therefore, first you prepare the required accounts. Okay. First required is statement of face. Opening statement of face is required. That is already given in the problem. Second requirement is cash book. Cash book is also given. Cash book is also given. Then second requirement is completed. Third requirement is related with debtors and creditors. So I will prepare debtors account and bills receivable, creditors account and bills payable. First I will prepare debtors account. You see. First debtors account. Debtors related account is bills receivable account. Remember this. Bills receivable account is related with the debtors. So these two are to be prepared simultaneously. Simultaneously you prepare these two. Okay, debtors account, bills receivable account. First you better to enter the opening balance and closing balance. Right? Simply write the to balance brought down, by balance carried down. Okay, like this you write. In the same bills receivable also. To balance brought down, by balance carried down. You write the information like this. Okay. Then you enter the information as per the available, information you enter. Okay, now see, this is question number 7. This is debtors account, creditors, bills receivable account, debtors account, bills receivable account, opening balance, to balance brought down, by balance carried down, to balance brought down, by balance carried down. This is the step. First, you take the balance from the statement of affairs, opening balance. Opening balance is available in the opening statement of affairs. From the first opening statement of affairs. First, I'll write the debtors. Debtors account in the opening statement of affairs is 10,000 and bills payable, bills receivable is 500. Okay, this is the amount from the statement of office. Then you come to the second statement, cash book. Cash book debit side, debtors and bills receivable are there. Debtors and bills receivable are there. You record on the credit side of the account. Buy cash 30,200. Bills receivable account, buy cash 300. These two from the cash book debit side. Clear? First, I have taken the opening balances from the opening statement of office. First statement, and went to second statement. Okay. In the second statement, I collected two items related with the debtors and bills receivable. Then come to the third part. In the third part, first is credit sale. First is credit sale. I write in the debtors account debit side. Credit sale is 45,500. Okay. Then after the credit sale, discount allowed is there. So in the debtors account, buy discount 500. Next is related with debtors is return inward and return outward. Sorry, return outward, inward. Return inward is sales return. Therefore, you take the sales return in the debtors account. So buy return inward, 600. After return inward, then there is a bad debt. Sorry, bills receivable is there. Buy bills receivable. Bills receivable received, that is 700. If you recorded here as a bills receivable, same you have to take in the bills receivable account as two debtors, 700. This is the point you have to see. This is bills receivable in the debtors account. Bills receivable received. Same goes to bills receivable account as two debtors. This point you remember. And next item is bad debt. Two bad debt, amount is 500. Okay. These are the items collected from the third part. The first part completed regarding debtors. Now I'll prepare the creditors account and bills payable account. This is creditors account and related to that is bills payable account. Creditors account, bills payable account. Here also first you write the balance. Here balance comes in the credit side. Opening balance credit side, closing balance debit side, because these are the liability accounts. Buy balance brought down 18,000 in the statement of office. 18,000 is in statement of office. Then you write the closing balance. Closing balance I will take afterwards. Okay, in the bills payable, buy balance brought down, to balance carried down. Okay, then balance brought down amount from the statement of here is 1,800. It is in the liability side. Then you go to cash book. It is collected from the first statement. Once first statement is completed, go to second statement. In the second statement, cash book, you see credit side. You see the credit side. In the credit side, the first item is bills payable. Bills payable, payment to bills payable is there. So in the bills payable account, you write to cash. To cash rupees 1,000. To cash rupees 1,000. Then next is creditor. In the creditor account. In the cash book, buy creditor there. In the creditor account, that will be to cash. 17,800. These two items collected from the cash book. Then come to the adjustment. Third part. In the third part, first is credit purchase. Credit purchase comes on the credit side of the creditor account. By credit purchase, amount is 20,000. Next is discount earned. Discount earned comes on the debit side. To discount, 1,000. Okay. After discount, return outward is there. To return outward, it is purchase return. Amount is 500. After return outward, next is bills payable accepted. Accepted means bills payable given to supplier. So two bills payable in the creditor account. Amount is 2,000. Here you recorded as bills payable. Okay. This payable must go to bills payable account as by creditor. By creditor. Okay. Sorry, again it is bills payable. I recorded. You write as bills. By creditor rupees 2000. Okay. And these are the items completed. Items completed. Now I will close the first bills payable account. I will close the bills payable account. Total is 3,800. Okay. Credit side total is 3,800. Debit side total 3,800. Then debit side only 1,000 is there. Difference is 2,800. You already recorded the item. Already recorded the item in the debit side. To balance carried down. Okay, to balance carried down you recorded. So whatever difference comes, this balance is to balance carried down means closing balance. This is the closing balance. Okay. To balance carried down 2,800. This account tallied. Come to the above account, creditors account. Okay. First you have to close the bills account, then goes to debtors or creditors, above account. Total credit side is 38,000 creditors. Then 38,000 is the total. Then difference is to be represented as to balance carried down. To balance carried down is 16,700. This is the closing balance goes to balance sheet. Remember this. These two goes to balance sheet. Now I'll close the debtors and bills receivable account. Debtors and bills receivable account. Bills receivable account total is 1,200 debit side. Credit side 1,200. Difference is by balance carried down 900. 900 is the balance. Then you close the debtors account. Debtors account total 55,500. 55,500. 55,500. Difference is 23,000. This is called as balance carried down. So these balances you have to take in the balance sheet. Remember this point. Okay. Now I'll prepare the trading profit and loss account. Trading profit and loss account. First, I'll prepare trading account because the items are more. Therefore, I'll prepare trading account in one slide and second slide P&L account. Okay, you see here. This is the trading account for the year ending 31st 12. First, you take opening stock. Opening stock is 15,000. Then second item purchase. To purchase, you take credit purchase from the creditor account. Cash purchase from the cash book. Then you take the total purchase. Deduct the return, purchase return. Purchase return means return outward. Okay, you see here. Credit purchase is 20,000. Cash purchase is 2,000 in the cash book. Total of this is 22,000. Then deduct the return. Return is 500. That is return outward. 500 rupees there in the creditor account or in the problem. You deduct this 500, balance is 21,500. Okay, in this way you have to adjust. Then next item is in the cash book. In the cash book credit side, you see that wages is there related with trading account. 2 wages 5,000. Okay. Then carriage inward is there. Carriage inward 1,500. Then duty and octroi. Duty and octroi is there 500. Okay. These are the items related with the trading account. Okay. These are the items comes in the debit side. Now we go to credit side. In the credit side, first I'll write sales. In the sales also, you have to take cash sale, credit sale, then less return. Okay, cash sale from the cash book, credit sale from the debtors account, then return from the debtors account. So first credit sale is 45,500 debtors account. Cash sale in the cash book is 10,000. Cash book debit side 10,000 is there. Total is 55,500. 55,500 is the total. Then less return. Return inward. Return inward 600. You return inward 600. Deduct. Net sale is for 54,900. 54,900 is the net sale. Clear? Then you take the closing stock. Closing stock is 20,500 in the adjustment. In the last adjustment, closing stock is there. You take. Then close the account. Total is 75,400 credit side. Credit side total 75,400. You take same to the debit side, and then difference is 31,900. Difference is 31,900. This is called as gross profit. This is gross profit. Clear? This gross profit I will take to the P&L account part. Okay. You prepare trading profit and loss account in combined. Okay. Because of large number of transactions, I made 2 slides. So next is P&L account, profit and loss account. In the profit and loss account, first you take the gross profit. By gross profit, 31,900. Then you enter the transactions one by one. Okay, first cash book credit side. Cash book credit side, first item is office expense. Office expense is 1,500. After office expense, salary is there. 2 salary 1,200. Then next is printing. Printing is 800. Okay. And go to debtors account and creditors account. Go to debtors account and creditors account. In the debtors account, discount is there. By discount, here 2 discount, 500. In the creditors account, discount earned is there. That discount earned comes on the credit side. And one more is there in the debtors account, bad debt. You take bad debt. From debtors account, bad debt, discount. Then you take the depreciation. Adjustment number in the last adjustment is there. In the depreciation heading, first you take plant, 10% of plant. 20,000 is the plant value in the statement of face. 10% is 2,000. Then furniture also 10%. Furniture value is 2,000. 10% of 2,000 is 200. Then next one more is there, building 5%. 5%. Building value is 16,000. On 16,000, you make 5%, it is 800. Total of this is 3,000. 3,000 is the amount of depreciation. Okay. Next adjustment is relating to provision for doubtful debt, RDD. To RDD 5%. You have to make 5% on the closing debtors. Closing debtors is 23,000. On 23,000, you make 5%. Amount is 1,150. You see the debtors closing account, closing balance. Debtors closing balance in the debtors account is 23,000. You calculated. So 23,000 into 5% is 1,150. Okay, debit side completed. In the credit side, you see the cash book and account debit side. In the debit side of the cash book, there is no other items. And in the creditor account, there is a discount. You take that discount, buy discount rupees 1,000. Okay, this is the complete information regarding P&L account. Now you close this P&L account, then total is 32,900. 32,900 is the credit side total. Then difference is net profit. Net profit is 24,250. 24,250 is the net profit. And this net profit goes to balance sheet. Okay. Now I will prepare the balance sheet. This is the balance sheet of Mr. Sukumar as on 31st September 1984. 31st September. Sorry, Mr. Das is there. Okay, Mr. Das, 31st December 1980, balance sheet, first capital. In the first capital, you have to take opening capital. Opening capital is 44,700. This is already given in the problem. Opening statement of office. Then you add NP, net profit. Net profit is 24,250. Okay. Then is there any additional capital? No. In the cash flow, there is no. You take the total. Total is 68,950. Then for this you deduct the drawing. Less drawing. Drawing is 8,000 in the cash book credit side. Cash book credit side drawing is there. You deduct 8,000, balance is 60,950. Then you have to take the closing balance of creditor, bills payable account, closing balance. Okay, liability accounts. Creditor is liability, bills payable liability. In the problem, closing balance is not given. You go to the account, you see the account, and you take the closing balance of creditor. Closing balance of creditor in the creditor account is 16,700. Then next is bills payable. Bills payable 2,800. Bills payable account balance is 2,800. Next liability side completed. Go to asset side. Debtors is the first. You take debtors in the inner column 23,000. Less RDD 1,150. You deduct RDD. Balance is 21,850. Okay. Next you take cash account. Cash balance you take from the cash book given in the problem. Cash book given in the problem. Cash balance is 2,200. Closing balance you take from the account. Okay. Next bills receivable. Go to the bills receivable account. Take the closing balance. Closing balance is 900. Bills receivable. Then stock. Closing stock you take from the trading account or from the adjustment. 20,500. Next plant you take inner column. Opening statement of office. Plant from opening statement of office 20,000 less depreciation 2,000. Balance is 18,000. Furniture 2,000 opening statement of air less depreciation 200. Balance is 1,800. Okay, next you take building less depreciation 800. Balance is 15,200. Okay. Now you take the total. Total is 80,450. 80,450. Okay. In this way, you have to solve the problem. In this problem, closing balance is calculated. Remember this point. Missing figure or missing information in this problem is closing balance of debtors, closing balance of creditor, closing balance of bills receivable, closing balance of bills payable are the missing information. So we calculated 4 balances in this problem. Okay.